Meeting to order. Welcome to meeting number 56 of the House of Commons Standing Committee on Finance. Pursuant to the Standing Order 108(2), the committee is meeting to discuss the Canada Pension Plan Investment Board. Today's meeting is taking place in a hybrid format pursuant to the House Order of November 25th, 2021. Members are attending in person in the room and remotely using the Zoom application. Per the directive of the Board of Internal Economy on March 10, 2022, all those attending the meeting in person must wear a mask except for members who are at their place during proceedings. I'd like to make a few comments for the benefits of the witnesses and members. Please wait until I recognize you by name before speaking. For those participating by video conference, click on the microphone icon to activate your mic, and please mute yourself when you are not speaking. Interpretation for those on Zoom, you have the choice at the bottom of your screen of either floor, English, or French. For those in the room, you can use the earpiece and select the desired channel. A reminder that all comments should be addressed through the chair. For members in the room, if you wish to speak, please raise your hand. For members on Zoom, please use the raised hand function. The clerk and I will manage the speaking order as best we can, and we appreciate your patience and understanding in this regard. Now I'd like to welcome our witnesses for the first hour from the Canada Pension Plan Investment Board, President and Chief Executive Officer John Graham. And with Mr. Graham, we have Senior Managing Director and Global Head of Public Affairs and Communications, Michel Leduc. Welcome. And Mr. Graham, now you have an opportunity for your opening remarks to the members.
Good afternoon, Mr. Chair and committee members. Je suis John Graham, Président et...
My name is John Graham, and I'm President and CEO of CPP Investments. I'm accompanied by my colleague, Michel Leduc, who is our Senior Managing Director and Global Head of Public Affairs and Communications. This is my first time appearing before the House of Commons Standing Committee on Finance. I would like to begin by thanking you for your invitation, and I look forward to our discussion today. Transparency is the foundation of public trust. Although we are a commercial enterprise, our organization is defined by its public purpose, which is to help secure the retirement security of 21 million Canadian contributors and beneficiaries. Public accountability is a central tenet of how we operate. We go beyond our legislated requirements to ensure federal and provincial governments, as well as Canadians, are all well informed of our activities. Today's session is an important example of that. Before moving to questions, I will briefly touch on our organization, on the fund's performance over the last fiscal year, and I will share with you some operational highlights.
Is the professional investment management organization that manages Canada Pension Plan assets. We invest around the world in public equities, private equities, real estate, infrastructure, and fixed income. We are governed by federal legislation, the Canada Pension Plan Investment Board Act, passed by Parliament in 1997. The decisions made by policymakers at that time set us on the path to become the organization we are today. We operate under clear objectives to maximize returns without undue risk of loss, taking into account the factors that may affect the funding of the plan. Assets are strictly segregated from government funds and managed professionally and exclusively to pay benefits. We operate at arm's length from federal and provincial governments, under the oversight of an independent, highly qualified professional board of directors. Any amendments to our Act require the consent of at least two-thirds of the provinces that participate in the CPP, representing two-thirds of the population. Our governance structure and clarity of mandate are internationally recognized as a leading example of sound management of national retirement plans for other countries to emulate. We create value for the fund through active management. Our investment strategy is structured to be resilient in the face of wide-ranging market and economic conditions. Diversification helps mitigate risks of the CPP's inherent exposure to Canada, the only country from which it draws contributions. We are nevertheless highly overweight in Canada compared to its relative proportion of global GDP and capital markets. We will continue to be so, given our strong knowledge of the Canadian market. We recognize that active management is not a simple low-cost strategy. Each dollar used for expenses is a dollar not invested. Cost management and disclosure are key to our public accountability. Nearly 25 years after receiving our first $12 million of contributions to invest, the fund has surpassed $500 billion. When we first began to operate in 1999, everything was passively concentrated in Canada, and the fund was not expected to reach this milestone until 2028. Since that time, with investments in more than 50 countries, CPP Investments has contributed $378 billion in cumulative net income to the fund after all costs. Our most recent fiscal year, which ended March 31st, was solid despite turbulent market conditions in the fourth quarter. We achieved a net nominal return of 6.8%, and the fund grew from $497 billion to $539 billion. The volatility affecting public equities, at levels not seen since the beginning of the pandemic, muted returns achieved through the first 9 months. Bond prices also declined at a pace unseen in more than 40 years. On top of the ongoing pandemic, the war in Ukraine continues to send shockwaves around the world. In Canada, many of us are deeply impacted by the tragedy, and our hearts go out to the people of Ukraine. Despite economic and geopolitical headwinds, our diversified portfolio demonstrated its resilience as we outperformed our benchmark. That benchmark represents what could be achieved through a low-cost passive alternative. Since 2006, we have generated $41 billion of additional income through active management. This fiscal year, our active programs, including private equity, infrastructure, real estate, and credit, were the main contributors to the fund's overall performance. Because the CPP is designed to serve multiple generations, long-term performance is what matters most. To that end, we achieved a 10-year nominal return of 10.8%, with cumulative net income of $329 billion over the same time frame. All of our performance results are reported net of cost. This year, we appointed our first Chief Sustainability Officer, who is now responsible for integrating an enterprise-wide approach to sustainable investing with a focus on climate change. This follows on our commitment that our investment portfolio will be net zero of GHG emissions by 2050. As an initial step, we will boost our investment in green and transition assets to roughly twice their current level by 2030. As part of our announcement, we made it clear that we do not believe in blanket divestment. We went beyond that and announced a dedicated decarbonization strategy that will support and partner with companies that are innovating and developing new technologies to lower their emissions. If we lose our conviction that a particular company is not achieving its decarbonization plans, we will not hesitate to sell. We believe our overall constructive approach to contribute to the transition is more productive towards the global goal of net zero compared to divestment. These steps build on work the organization has been doing for more than a decade to increasingly incorporate risks and opportunities associated with climate change into our decision-making. We developed a comprehensive program that ensures the assessment of climate change is embedded into our investment process. Our engagement and influence through proxy voting help push our portfolio companies to improve their climate change practices, and we are pressing the market for better standards and disclosure. We believe that on the spectrum of perceived wrongdoings by corporations, a violation of human rights is one of the most severe and indefensible. A failure to address human rights issues is among the top reasons we will not invest in a company. We believe that companies that uphold human rights will perform better. We have been strengthening our systems and processes to capture not only direct, but indirect exposure to companies that do not uphold human rights. This includes how those companies address potential issues in their supply chains. Ça fait 25 ans que les parlementaires ont...
It has been 25 years since parliamentarians decided to create our organization to serve as the investment manager of the CPP Fund. Our 2,000 world-class professionals in 9 global offices are dedicated and purpose-driven. They have a track record of investment performance and operational excellence. We are committed to growing the fund and helping current and future beneficiaries achieve retirement security. I'm honored to be in this position, and I'm excited about what the future has in store. With that, we look forward to your questions.
Thank you, Mr. Graham and Mr. Leduc, and thank you for the work that you do on behalf of Canadians' pensions. I know the members will have many questions for you. We are going into our rounds of questions. In this first round, each party has up to 6 minutes to ask questions of yourselves. We are starting with the Conservatives, and I have MP Chambers up for 6 minutes.
Thank you very much, Mr. Chair. Welcome, both Mr. Graham and Mr. Leduc. It's a pleasure to have you with us. Mr. Graham, since it's our first time meeting, congratulations on your appointment. You should be obviously very proud to lead this important organization on which many Canadians rely for retirement security, but also one that is looked very highly upon throughout the world with respect to pension plans. So welcome. You mentioned in your opening statement a little bit about structure and governance and a bit about independence. I'm just wondering if you wouldn't just expand a little bit. How important is independence with respect to investment decisions? You know, in this political climate, there's often many calls for pension plans and others to change their investment decisions based on some political factors as opposed to, sound investment decisions or long-term horizons as you've laid out.
Great, thank you. And the independence, I would describe it as essential. And we have a single fiduciary duty, and that is to maximize return without undue risk of loss, taking into account the factors that impact the funding of the plan. And we have 2,000 professionals in the organization that are focused on delivering investment returns and the best investment returns for the contributors and beneficiaries. And that independence allows us to be a global investment organization. We are a pension plan, we're an investment organization, we're not a sovereign wealth fund, and we're able to make investment decisions that are in the sole best interest of the contributors and beneficiaries.
Thank you. You just mentioned sovereign wealth fund. I understand that the CPPIB has an exemption in the US from how they would look at sovereign wealth funds with respect to independence. Can you just give us a brief discussion about why that's important, that distinction is important to maintain that exemption?
Yeah, CPP Investments is an exempted investor in the U.S. under CFIUS, and that allows us to be active in lots of different markets on the private and the public side, and in many ways be treated like a domestic investor in the U.S. without going through a national security review. And that has allowed us to, U.S. is our biggest market. It's the largest market we invest in, and it allows us to operate very much as a domestic investor.
Thank you. And so, one of the stats, a metric the government often likes to use, governments of all stripes, by the way, over the last number of years, is this notion of what they call net debt to GDP, which actually includes the assets of the CPP. Does that metric kind of imply that there is a little bit less independence between, say, the CPP and government? Does that maybe potentially pose a bit of a problem as we talk about these ratios and how well Canada's doing if we do get an exemption on the basis of the independence?
Yeah, I think our independence is pretty clear, and the funds are there for the sole purpose of paying out benefits. They are segregated funds. With respect to some of the specific accounting rules on how they get accounted for, I'm actually not that familiar. But the funds that CPP Investments manages are there solely to pay benefits.
Right. Thank you. So, our position would be that those assets are not to be used or are available for government and for pensioners. Maybe a little bit more of a general question. Large passive ETFs now control a significant amount of voting securities in publicly traded securities across the world, but in particular in North American markets. Do you believe that these ETFs should continue to have the ability to vote on shareholder, at shareholder meetings and exercise a significant amount of influence? I'm just thinking about some of the political influence or the political winds that sometimes blow that can these large ETFs can now kind of implement on corporate on the corporate structure, corporate entities across North America.
Maybe I'll share on how we think about voting our proxies. And we actually publish on our website our principles for voting our proxies. And we do think it is important as a active manager, as we are, as it's important as a fiduciary to vote the proxies. We're very clear on what our policies and what our principles would be. And they're all grounded in value creation, all grounded in across different metrics, different categories, but all really focused on areas where we feel that drive value and drive long-term value for companies. So I won't comment specifically on the ETF, but for us as an active manager, we do think it is important that we do vote our proxies, and we're very transparent on our website as to how we're going to vote.
Thank you very much. One final question in my last 30 seconds. Obviously, there's lots of critics in this discussion between active and passive investment. There's some pension plans in the U.S. that primarily use a passive strategy. Can you just talk very briefly about how you manage personnel costs and maybe how you benchmark personnel costs to know that Canadians are receiving full value for active management?
Yeah, it's an important question for sure as we think about active management. And as I said in the opening remarks, active management is not the low-cost path. Our view on it is the path that drives the most value. And we're here to maximize return without undue risk of loss for the contributors and beneficiaries. And we certainly take the perspective and really take the approach that every dollar that we spend on expenses is a dollar that's not in the fund to invest. So when the decision was made to pursue active management, there was a view that CPP Investments would have certain comparative advantages. We have scale, we have time horizon, we have certainty of assets. And that would allow the organization to compete in the global capital markets. And to date, it's been a successful strategy. That since the inception of active management, we've delivered $41 billion of dollar value added, as we would call it. And those are funds that are in the portfolio now that wouldn't be there if we didn't pursue active management. So as we think about expenses, we think about it very much from a return on investment and think about how we need to allocate our internal resources, allocate them towards value-added activities to maximize the value added and maximize the return.
Thank you.
Thank you, Mr. Graham.
Thank you, MP Chambers, Mr. Graham. And now we are on to the Liberals, and we have MP Baker for 6 minutes.
Thanks very much, Chair, and thank you both for being here today. Before I get into my questions, I'll just say, Mr. Graham, it's a pleasure to have a chance to ask you some questions. Thank you for being here. I will say I had the pleasure of meeting with some of your representatives who spoke a little bit about some of the topics you've already spoken to, and I look forward to having this conversation. I will also say I've had a number of former colleagues from one of my prior employers at the Boston Consulting Group join your company, join CPPIB, and I think you are fortunate to be benefiting from their expertise as well. So my first question is around the current context we find ourselves in globally. We've had the pandemic. We still have the pandemic. We've had the war in Ukraine. Can you just talk a little bit about how the pension plan has been affected by these macroeconomic forces and how you've had to adjust in your management of the plan as a result?
So one of the keys, and I touched on it a little bit during my opening remarks around diversification. And the organization made a decision years ago that it's important and it's the right path for long-term value creation to have a diversified portfolio. To have a diversified portfolio across asset classes and a diversified portfolio across geographies. That allows us to get access to the sources of global growth, to have a more diversified portfolio and look for opportunities to drive alpha or value added. And as the fund grows, having that global footprint and having the global capabilities and the relationships has been really important. I think it's fair to say that right now, as we look forward, navigating the geopolitical landscape is one of the biggest challenges that's going to face institutional investors. You highlighted a few of the challenges. I think how we would think about it is we have a diversified portfolio, diversified across all the major regions of the world, the ability to allocate capital to where we see the best regions. But I think this is going to be, as I mentioned, for investors, one of the big challenges going forward is navigating geopolitics.
And so let me expand on that if I could. If we think about some of the risks going forward, there could be future pandemics. We're not through COVID yet, so we don't know where that will go, although we hope we're getting towards the tail end of the pandemic. There's climate change. You spoke about that in your remarks. In my view, there's the risk of future wars, especially if the world doesn't effectively stand up to Vladimir Putin in terms of what he's doing in Ukraine, because if we don't, it could encourage others to do the same, or Russia to do more of the same. How is significant, in your view, are these risks and others that perhaps we haven't faced in past decades to the same degree? And how do you mitigate them? Like, how do we ensure my constituents who are watching this, how do they know that their pensions are secure?
So two things that we've already touched on, I come back to. One is diversification and the ability to be diversified across asset classes and geographies. And the other that we just actually touched on is active management and the importance of active management, and the importance of having built out the capabilities across asset classes, across geographies, having the relationships, the infrastructure to invest in all these different areas. And I think going forward, the value of active management is going to be even greater because of the importance of navigating these risks.
And so when you say active management, for those folks who are watching at home, I mean, active management to me means you are not just sort of investing in what most folks would consider passive investment is something like a mutual fund. Am I right? Where you put the money in and you expect it'll grow over long term. This is a situation where you're actively buying and selling assets. Is that what active management means to you?
Yeah, what active management means to me is we think about security selection, in that we are looking across the globe for the best opportunities, the best companies, the best assets to invest in. And the way we kind of think about portfolio construction is think about at a very high level without being too prescriptive on the allocations for asset classes and geographies, having a general sense, and then building the portfolio asset by asset. So finding the best companies, finding the best assets to invest in. But there's another component to this too, and that is actually being a active owner of those assets and pursuing value creation opportunities within the companies to extract more value. And as we talked about with voting on proxies, of being a owner that influences the value creation within the companies.
Okay. And then we find ourselves in a high inflation environment at the moment. Can you just talk briefly? I've only got about 60 seconds left, but can you talk briefly in the 60 seconds? How is that impacting your returns? So in other words, the money that you raise to pay people's pensions, and how is that affecting the demand for pensions, the amounts that people need to pull out to receive their pensions?
So I will focus on the asset side. And if you zoom back and think about CPP contributions, benefits, demographics, it's a much longer answer, and I'll focus on the asset side, and maybe keep coming back to the word diversification and the importance of diversification. We build a portfolio for the long term. We build a portfolio that we think will be resilient over the long term and will be resilient across multiple economic environments, including high inflation. Our portfolio has a fair amount of real assets in it, which are assets that will be somewhat protect us in inflation. But I think it's fair to say that asset prices in general across the broad market, inflation will be challenging.
Thank you, and thank you, MP Baker. We are moving to the block now, and for 6 minutes, MP Sainte-Marie.
Oui, alors bonjour messieurs.
Good afternoon, gentlemen. Thank you for being here, and congratulations for your appointment. And thank you once again for taking the time to be here with us. I would like to thank our analysts for the exceptional work they do for us at every meeting. Hats off to them once again. This helps us to better prepare ourselves for the witnesses we receive. With our intensive work schedule, the analysts of the committee have put in incredible hours, and I wish to underscore their work, which is greatly appreciated. Gentlemen, just to be clear, your net assets amount to $537 million, and with your new calculation method, your management costs are of $7.9 million. Is that the case? The combined profile for your costs? 5.9. Very well. So that's an acceptable ratio. When we compare the evolution of the geographical distribution of your investments, if we take 2006, close to 2/3 of your investments were in the Canadian economy, and you stated earlier we're at 36%, and it's mainly in the US, Europe 16, Asia 6, and 16% in Canada. What explains your choice to invest less in the Canadian economy?
Described as investing less in Canada. So as the portfolio has grown to $539 billion, we have continued to grow our investments in Canada. And I said we have 16% of the portfolio with exposure to Canadian assets, which at $539 billion will correspond to $80 to $90 billion in assets. Canada continues to be an important market for us and continues to be a market where we look for opportunities, but we are a global investor. We are an investor that looks for opportunities all over the world. And as we think about investing at CPP Investments, and we think about maximizing return without undue risk of loss, taking into account the factors that impact the funding of the plan. We also believe, as I mentioned in my opening remarks, it's important for us to diversify away in some ways. 100% of the contributions come from the Canadian economy. And these assets are solely for the beneficiaries. And diversifying the assets to the global economy is in the best interest of the contributors and beneficiaries. You know, we still, as I mentioned, have 16% invested in Canada, which is a material portfolio. If we look at other funds around the world, for instance, the Norwegian fund, they will actually completely diversify away from Norway to ensure that 100% of the assets are invested outside of Norway to provide that diversification. But we still view Canada as an important investing market for us.
Très bien. Donc, c'est ça, votre offre.
Very well. So your aim is to maximize return, and this is why you've opted for this formula while reducing your risks. At the Caisse de dépôt, the parallel aim is to develop the Quebec economy. Thank you. When I look at your return rates, which are excellent overall, we see that in 2016, the return was lower than expected. What explains this anomaly? It's been a long session. Sorry for tripping up. So what explains this anomaly, and what do things look like for this year? Is it going to be a different picture?
Was a question for 2016?
Yeah. Why was it, compared to recently, why was it so diminished?
In 2016?
Yeah, 2016.
I don't have that answer offhand. We can come back on with respect to 2016. But as we think about today and we think about going forward, the 10-year returns for the organization have been 10.8%. And that stacks up incredibly well against really any global institutional investor. So we sit here today and look forward to the global markets. And I'd say we're cautious. And we're cautious with, we've already talked a little bit about inflation, with inflation where it is within many countries around the world, with rates expected to rise, growth expected to slow. I think we're cautious. And we're cautious about the headwinds going forward.
En parlant et c'est tout à votre.
I thank you for this. We talk a lot about cryptocurrencies these days. Has your board made speculative investments, as I'd label them, in cryptocurrencies? If such is the case, what is your vision of that?
We have not invested in crypto.
Pourquoi?
Why?
We have spent quite a bit of time. It's a growing market. It's a $1 trillion+ market, and we spent a lot of time trying to study blockchain, digital currencies, crypto. But as it sits right now, and as we think about the investing, we have not invested in crypto.
Merci.
Merci.
Et merci, MP Sainte-Marie.
Thank you, Mr. Sainte-Marie.
Now going to hear questions from the NDP. MP Blakey for 6 minutes.
Well, thank you very much, and thank you for being here today to answer questions. It's very much appreciated. I wanted to ask, I read with interest the section of your report about investing in the path to net zero, and I just wanted to know what kind of public reporting out that you do on your progress to date. Is it, do you have a kind of annual report on that, or how do you report out on that?
Yeah. So in February of this year, we made a net zero commitment. And part of that, we also published our principles for the net zero commitment and around investing in the entire economy transition, not going down a path of blanket divestment, looking to double our investment in green and transition assets. And we've also been very actively engaged in measurement and reporting. And this is an area that, as we think about the path forward, there does need to continue to be work. So with respect to how we report, we have an annual report called our Annual Report on Sustainable Investing. And within that, it is more than just climate, but within that, we actually do provide disclosures on our portfolio and disclosures on our own emissions.
So I believe it's maybe going back 5 or 6 or maybe a little more years now. There was a task force on climate-related financial disclosure. I'm wondering if you guys have adopted some of the reporting requirements there, what work you're doing to ensure that when you report out on climate-related investment goals, that that folks are able to kind of compare apples to apples, the work that you're doing to other countries or other blocks like the European Union. So how do your metrics compare, and are those publicly available?
So I'll ask my colleague Michel Leduc, who is involved with the TCFD work, and maybe just I'll quickly say that for us this is actually something that's very important, and something that as an organization we have been historically. We were one of 2 pension plans that was at the table for TCFD, and it's something that we continue to be actively engaged with different standard bodies around the world to ensure that there is comparability, that there's comparability across geographies. And as we think about as a global investor, that's important. And Michelle, maybe you want to share a little bit on the history.
Yeah, I'll just reinforce. We were very honored as one of the only one of 2 pension plans that was invited to join the task force and be an architect of these disclosures. And the rationale for us to want to be heavily engaged in being an architect is the best interests of the contributors and beneficiaries are very well served by companies being increasingly more transparent. It's very difficult for us to be undertaking due diligence on the potential for 10,000 securities globally. Of course, we can do a lot of that hard work when we're doing a direct investment, where we're a significant investor in a company. Going into the due diligence process, we've developed a specialized toolkit for us to better understand the strategy of those companies and how they're moving forward to abate and to decarbonize their operations. But if a significant component of the portfolio continues to be widely held across thousands of securities, we're dependent on disclosure and in that transparency. So it's an area that we've been actively involved, and it's an area that we're continuing to be a thought leader and to push other organizations, particularly in areas that haven't necessarily been considered in the past. We could talk about a little later if the question comes up around abatement. And that means basically what are the companies doing that are very hard to decarbonize, cement and steel, for example. And so it's not just the quick wins. It's also those things that just will be heavily dependent on innovation and technology.
And what's the process for establishing a taxonomy of investments that will count for you as green investments? And where is that publicly available? Or if it's not currently, when do you anticipate it being publicly available?
Yeah, so green and transition assets, there's a technical definition, and it's in our annual report and in our report on sustainable investing.
Okay, and does that include carbon capture and storage technology? And if so, who's making that decision? And where are the opportunities for input into what is, properly technology or venture that's going to reduce emissions? And those, we know that in the market there are a lot of things that claim to be green and aren't. So what kind of process do you have to kind of make changes to that taxonomy as time goes on, and where are the opportunities for public input on that?
Yeah, so first, I think looking for consistency, that I would say is probably the single biggest challenge for a lot of these issues, particularly whether it's carbon capture or other areas. One of the areas that we've been working with is international standards boards, and they've been making considerable progress, perhaps not as quickly as we would like as an investor. Canada has been a very active participant in that process. Part of the international standards board's offices will be in Canada, and that will allow us to have a more direct access. But particularly around these new technologies and how they're classified and how they're measured, particularly carbon capture, as you mentioned, will be very important.
When you say Canada's involved,
Blakey.
is that the CPPIB
that's the
or is
time.
that the
It's
Canadian government?
it's the Canadian standards offices will,
Okay.
as a member of, and the International Standards Board will have an office partly in Montreal.
Okay, thank you.
Thank you. We are moving to our second round members. We have the Conservatives up first. I have MP Lawrence for 5 minutes.
Thank you, Mr. Chair, and congratulations, Mr. Graham, and congratulations to both of you on running a first-class organization. Had the opportunity when I was on public accounts to study your organization, and really great things that are coming. And in fact, my advice to you would be to continue to be staunch advocates for your own independence. It's my own personal belief that the road to poverty is paved with politicians' good intentions, and so would encourage you. So and that'll be the line of my questions, for example. So what happens, and I think most folks know, but I think it's important to put on the record, what happens if your fund dramatically underperforms? Not that it will, but what would happen if it dramatically underperformed?
Yeah, go ahead.
So it's important for us to be humble, and what I mean by that is investment income is only one of the components that drives the sustainability, which is measured on a 75-year horizon. Historically, if I think of, not to get too technical, but the different accounts, there's the base CPP, and then after recent reforms, about 4 or 5 years ago, there's the additional CPP. They're structured differently. The base CPP is dependent on largely economic and demographic factors, things like immigration rates, fertility rates, mortality, and obviously net income. On the additional CPP, because it's fully funded, a greater part of that account is dependent on net income. So what that means is, working really hard under John's strategy and leadership, it's very important for us to really lean in on those important words created by the parliamentarians around maximizing returns, because the more returns that we produce, the more it creates additional buffer for these other factors that are outside of our control. And so it would be difficult for us to make a promise to Canadians to say, the fund will continue to be sustainable forever, because there's a number of factors that we don't control.
And I'll just simplify it because I'm just a simple politician and lawyer. If in fact the fund underperforms, either contributions have to go up or benefits go down. Would that be incorrect in saying that?
if that were to happen, so at the end of this year, for example, the Chief Actuary of Canada will release its report that it does after a deep dive, a triennial report every 3 years, and looking at all the factors, including inflation, including all of those demographic. If, for example, down the future, the chief actuary would just say that, as they did, in fact, in the mid-90s, to say the fund was going to go bankrupt, which was one of the reasons we were established. If that were to be the case, the 10 finance ministers representing the jurisdictions that would need to come together and make those very difficult decisions. If they can't come to an agreement, there's actually an autopilot. There's a default mechanism that would fix in looking at whether the contribution rates would need to go up.
And so, if in fact politicians started to corrupt the your focus on maximizing return, and that return were to be eroded, it would either hurt or workers or seniors going forward. Would that be correct?
It would be a disaster for 21 million contributors and beneficiaries.
Thank you for that. And just one last, how much time do I have, Chair? Yeah, just one last note. So we look at the sector, the oil and gas, and clearly we want to invest in renewables and we want to be sustainable. But when we look at pulling funds from sectors like oil and gas, it often has unintentional consequences. So when politicians start thinking, so in this case, by underfunding oil and gas, if that were to ever be done by pensions, by any funding, you're actually empowering countries like Russia, right? And so we'd just to get your comments on that. Are we invested in Canadian oil and gas, and what would be the return rate that we've received from that year to date?
Yes, so we are invested in Canadian oil and gas. We don't disclose, and we can the specifics down into the sector level. And as part of our net zero commitment, we were very clear that we're not going to go down a path of blanket divestment. We actually think it's counterproductive to the transition to net zero. And as we think about the oil and gas sector, we actually think about investing in energy companies and investing in energy companies that have engineering and scientific know-how and to produce energy and get it into people's homes at industrial scale. And that's going to be required for this transition. And we've been quoted as saying that blanket divestment is a short on human ingenuity. It's essentially excluding part of the economy from what has to be an economy transition.
Thank you. Thank you, MP Lawrence. And now we'll hear from the Liberals. We have MP Zarowitz for 5 minutes.
Thank you, Mr. Chair, and I want to thank both of our guests for being here, and thanks so much for the important service that you provide to Canadians. My first question is, I'm always thinking about the residents of my riding of Davenport, and maybe you could start off by talking about the value that the Canada Pension Plan Investment Board offers in comparison to options for self-managing a retirement.
So the CPP, and I'll talk CPP, and as Michelle started to introduce, there's actually the base CPP and the additional CPP. And the base CPP is the plan that has been around since the 1960s, and it was always designed to be one of the three legs of the stool for Canadian retirement, including workplace pensions and savings. And with workplace pensions moving away from defined benefit to defined contribution, the CPP is increasingly important. It's part of the rationale for moving to the additional CPP. Going forward, I personally believe that the CPP's relevance for retirement in the decades to come will only increase with the additional CPP. It's one of the reasons that we are really trying to continue to educate on the importance and what the CPP actually provides and the importance in decades to come to the retirement of Canadians. Maybe Michelle, you'd like to add something?
Yeah, I would just say all of us, probably the single biggest risk that we all face, financial, is outliving our assets. And as John indicated, with the majority of Canadians not having a workplace pension, the erosion around defined benefits to defined contribution, and even your own personal savings, whether they're through tax incentives like TFSA or RSP, none of those provide longevity risk. For most Canadians, the only source of longevity risk is the CPP.
Thank you so much. The next question, it might sound a little odd. There is a rise of misinformation and disinformation that has infiltrated just our, not only our lexicon, but also just information, how, how people report it, what is reported. Is that something that is of concern to CPPIB as you're researching and determining who you're actually investing in? Is that a consideration?
Maybe I'll take that make a couple comments. First on the diligence, and then even how we think about CPP investments and how we present CPP investments to the Canadian public. On the diligence side, this gets back to the importance of active management and the importance of building out the capabilities to be able to do deep diligence on the opportunities that we see. It's why we think it's also important to have a global footprint and to not be a suitcase investor, and to be able to actually have those local relationships. We use our internal teams. We complement that with experts when needed to do deep diligence into the different areas. Now, with respect to CPP investments, it's also one of the reasons why we feel it's important to be sharing our results and to be as transparent as we are. And I mentioned again in the opening remarks the importance of transparency. And myself, Michelle, other senior members of the team are continually sharing the CPP investment story.
Thank you. The next question I have is around net zero. To what extent, and I know there's been a conversation around sort of standards, to what extent does CPPIB say we're only investing in companies that are moving to net zero and that have some sort of a plan on mitigating the risks due to climate change?
Yeah. So as we talked about a little bit, we view the transition to net zero. It's an economy-wide transition. The whole economy has to move to net zero, and it's not going to be a linear path. And barring really dramatic changes in consumer behavior, industry, steel, aviation, transportation, concrete, there's opportunities to make these industries more green. We've developed an internal framework called our abatement capacity framework, and to look at an opportunity, look at a company, and to think about how much carbon can we take out of that company, and how much can be removed with very little cost today, and then at escalating prices of carbon, how much can be removed, and then there's often some that just can't be removed without some technological innovation. So I think what's important here is we think about our investing in the companies, and we call it our kind of decarbonization strategy. Is we don't take a binary view that it's either all or nothing. Let's start going down the path and removing what we can and what's economical today, and move as far as we can. But let's actually start going down the path. Looking at one investment recently where we could get 86% of the way there. 14% we couldn't get there without some technological innovation, but the important thing is to actually start moving there today, as opposed to divesting because we can't get 100%.
Now to the block, MP Sainte-Marie for 2.5 minutes, please.
Merci, Monsieur le Président.
Thank you, Mr. Chairman. I'm going to follow up on my colleague Julie's questions. So your carbon neutrality program for your operations and your portfolio investments, you've set a goal of 2050. Why 2050 instead of 2040 or 2060? And what impact will that have on your annual return, your average return rate annually?
So with respect to, we set our net zero for 2050, and to be aligned with global standards. And maybe I'll share a little bit of how we think about the near term and how we think about investing in decarbonization in the near term. As we mentioned, that we believe this is the whole economy needs to transition. We actually believe at CPP Investments that this represents a generational investment opportunity. And whether the number is $2.5, $3.5, $4, $5 trillion, but the global economy needs a lot of capital to transition. And what it needs is patient capital, partnership-driven capital to transition. And that's the type of capital that CPP Investments has. So we've been building out a real competency for investing in this economy transition. But what that means is as we invest in companies and work with them to decarbonize, the actual carbon intensity of our portfolio may increase in the near term. But we'll have a bigger impact of working with these companies to decarbonize.
OK, merci. Donc, il me reste...
Thank you. So I have 1 minute left. How are you managing climate change risk in your portfolio? Thank you.
And I think this is where we spent a lot of time over the past 10 years thinking about climate and really looking through the portfolio and looking through new investments and actually thinking about the climate risk from with respect to physical risk and transition risk. So actually putting in the appropriate risk management to look at the portfolio, look at the exposures in the portfolio, and actually every new investment that comes in goes through this risk assessment. But maybe coming back a little bit to our decarbonization strategy, I think this was the real step forward for the organization in that transitioning from thinking of this just as a risk to actually an opportunity and a real opportunity for the organization.
Merci beaucoup.
Merci, MP Sainte-Marie.
Thank you, Mr. Sainte-Marie.
And now to MP Blakey and NDP for 2.5 minutes.
Thank you very much. I note that between 2006 and 2022, real estate as a percentage of your total asset mix went up from 4.2% to about 9%. And I'm curious to know, there's obviously been a lot of talk about the housing market. One of the things at play in the housing market are institutional investors acquiring buildings with affordable units, rent-evicting tenants, jacking up rents. And while it seems to produce a good return, it's not a good strategy from the point of view of ensuring that Canadians are housed. It's not a good strategy from the point of view of ensuring that employers can find employees, because of course housing is one of the real pressure points for employers when they're trying to attract talent. I'm wondering if CPPIB has any policies in that respect to make sure that it's not one of the investors in the housing space that is evicting tenants out of affordable units.
Yeah, residential housing is not a focus for us. We will have some small exposure. As we think about our real estate portfolio, our focus, especially over the past few years, has been building out logistics with the transition to e-commerce, data centers with the transition to digital. The residential side has not been a real focus for us, and we don't have a lot of exposure. So it's not an area we spent a lot of time on. That being said, for every company, every investment we have within the organization, we have an expectation of how the companies will operate, and we use our influence as a owner with respect to that.
Do you have any particular policies on rent-evictions and similar kinds of acquisitions that end up displacing existing tenants?
Yeah.
Probably the single most important decision we make when we invest in real estate is the partner. Where the team would spend most of their time would be on exactly that. So let's say we're partnering with a particular Acme Inc. that owns 50% and is 100% the operator. We will look at their policies. We will understand how they treat their tenants, and so that's probably the single biggest risk management, because the brand is important both for the operating company but also upstream for the organization as well.
Blakey, that's the time, and now we'll hear from MP Stewart for the Conservatives for 5 minutes.
Thank you, Mr. Chair, and thank the two of you for being here today. I did some research before I came, not an expert in what you do for a living, and I do have great respect for that. I'm curious with respect to your benchmark. I looked into it a little bit. I read the words mid-cap European at some point, and it seems that some people with a little more knowledge than myself feel that your benchmark is not used by many others. And I'm just curious, could you just explain anything and everything about the benchmark so that I can understand it?
Yeah, so I'm not actually familiar with the reference to mid-cap European, but I think the benchmark that we report against is the reference portfolio. The reference portfolio is a risk equivalent mix of global equities and fixed income. And it represents a very simple passive alternative that's at the same risk level as our portfolio. So you think about the global equities component, it'll be a large mid-cap, so it'll capture all the big global companies, all the big, across all the big major geographies. And it represents a very challenging benchmark because it really represents global economic growth. Michelle, do you have any?
Yeah, I'll just say one way to think about it, and the 85% of the reference portfolio, our benchmark that John refers to, is composed of the S&P Global Large Mid Cap, which as John referred to, it's broadly, and it actually represents an investable portfolio. So when we talk about active management, this particular portfolio is one that it's the low-cost passive alternative. And so that's when we talk about dollar value add, it's the money that we make over and above had we invested in this portfolio, which is an investable portfolio that anyone could invest in, or an index, I should call it.
Thank you for that. Could you list other countries or jurisdictions that use a similar one or the exact same benchmark?
I couldn't list ones that use the exact same benchmark because benchmarks are set to represent the risk level of the organization. So even if we look across the other Canadian peers, they will have different benchmarks based on the risk level they take. In our annual report, we actually provided quite a bit of information on our attribution and thinking about the different sources of return, starting with the reference portfolio and thinking about how we break it down. And I think that provides a lot of disclosure in how we think about the sources of return in the portfolio.
I'll just add, very quickly, one of the reasons we picked that is because it's very transparent and accessible. So for Canadians to be able to hold our feet to the fire, are we really adding value? They could immediately see very clearly. So one of the criteria why we picked it was it's transparent, it's available, and people could go online and look how it's doing.
Thank you. I appreciate those answers. That gives me a lot of things to think about. Another question I have is with respect to the real returns to the Standard & Poor's 500. What does it look like this year, and how does it relate to other years? Just give me a little background on how those are going and what it looks like.
The actual markets right now.
Yeah.
Yeah, well, I think we have a March 31st year end. So, but I think what you're asking is more around the calendar year and how the markets are performing calendar year.
Yeah.
And I think it's fair to say that this calendar year has been a challenging year for global capital markets. U.S. markets are down 10 to 15%, depending on the market. Technology is down 20+%. And so I think global capital markets have had a challenging first part of the year.
Yes. Thank you, Mr. Chair. Thank you for the answer as well. One last question. Could you explain to the committee how you in your position how you would define equities? Like, what does it mean to the pension fund when you're managing day to day? Could you just an explanation?
Yeah, as we define equities, it's essentially being a shareholder in a company. It's owning shares in a company.
I appreciate that. Thank you. I have no further questions, Mr. Chair.
Thank you, MP Stewart.
Thank you.
And we are going to our last questioner, and this will conclude this second round, but also our opportunity here with CPPIB. And we have MP Chattel for the Liberals for 5 minutes.
Merci beaucoup,
Thank you very much, Mr. Chairman.
Graham and Monsieur Leduc for being here with us today. And congratulations, Mr. Graham, on your appointment. Very important work indeed that you do. I will continue with the line of question that my colleague, Mr. Blakey, had about your net zero investment strategy. I'm very interested in the green finance. Very happy to hear that you worked on the TCFD work. So well done. It's a very important work. I wanted to talk about what we call the ISSB, the Bureau on Sustainable Investment. I always forget what the International Sustainability Standard Board, I think. Yes, okay. Which will be, one branch will be in Montreal. Very big news for Montreal, for Quebec. Very happy about that. But it's a game changer, isn't it? Because for you and for the companies, this will allow companies to provide strategic information about their environmental impact. And that's really what you're looking at to define what would be a green portfolio. So could you tell us more about how will be the impact of having very good and robust standard on the green finance?
Yeah, I'll say a few words, and then maybe I'll ask Michelle to talk a little bit about ISSB. He's been quite involved, and it is important. It's important for as an investor to have consistent, reproducible measurements. Think about the carbon intensity in different companies. As we've talked about already, the ability to compare companies across geographies, across industries. I mean, it's critically important. And just to give an example, in our portfolio, we do publish in our annual report the carbon intensity of our portfolio. But of that, only around 35% of the numbers we have are actually reported by companies. The 70% of the numbers in there, we are using industry averages, we're proxying to get to what we believe is a representation of our portfolio. And it moves around. It's volatile because every quarter, and which is a good thing, more companies come out and disclose more information, and there's restatements and people refine the methodology, but it puts volatility. As we think about the transition to net zero, when we have stable, consistent, comparable measurements, it'll be really, really important, which is one of the reasons as a firm we're actually dedicating time to being involved and trying to be part of this process.
No, I'll just say, look, it is absolutely a big deal that Canada will host one of the offices around the International Standards Board. This is by far one of the most important accounting dimensions that we will see going forward. As John has indicated, climate change is significant risk, significant opportunity, and for institutional investors to have better data, better information. Also, as we challenge boards of directors in terms of the companies and overseeing their management teams, it gives us additional information to be able to track and measure if they're meeting their own targets and their own progress. But the fact that the international standards body selected Canada, I think, says a lot about the reputation this country has around this information. So I think it's very, very big deal for the country and for climate change risk analysis.
Thank you so much. Je vais, si vous me permettez.
And if you'll allow me, I'll continue in French. Could you talk about the value that you offer compared with self-managed retirement plans? This is something I'm really interested in for comparison purposes, comparing what you do investment-wise and the other options for self-managed retirement plans or programs.
I'm not exactly sure. Maybe she repeat.
Repeat your question.
Yeah, it's really about the value that you offer in comparison to option of self-management retirement plan.
Oh, okay.
Or pensioners.
Yeah. So I think as we think about CPP and think about CPP in investments, there's several benefits that are worth probably highlighting. One is the mutualization of the risk across the country and the ability to have a risk sharing, and there's diversification across the Canadian economy, and this provides stability over the long term. And as was already highlighted, the CPP is a pension plan, and it does provide defined benefits over time, and provides one of the few real checks and balances against longevity risk. And as I mentioned earlier, the additional CPP, which is really just starting now, it's very early. I think we certainly believe that the value of it will become very evident over time as it becomes a bigger part of people's retirement.
Thank you,
and
thank you, MP Chatel. Yes, we've reached the time, and it's an opportunity now just to thank Mr. Graham, Mr. Leduc, the Canada Pension, Investment Board. We thank you on behalf of the 21 million Canadians that contribute and to the pension plan and for the investments that you put those contributions into. Want to thank, as MP Saint-Marie mentioned, the analysts. They do a great job for us with briefing notes, with questions, etc., to help us, and the clerk and the entire Finance Committee, all the members, and everybody that's here. We really thank you for coming before us. I understand you do that. I'm new to this role also, as Mr. Graham, so I understand you do this annually, and I don't know if we do it always at the same time of year, Clerk, more or less at the same time of year, so we look forward to seeing you in a year's time and updating us on how the CPPIB is doing. Thank you.
Great.
Appreciate it. Okay. Members, we're going to suspend now to, we're going to be going in camera, so we'll give an opportunity to members that are remote to transition to the other Zoom. Thank you.
you.